In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, markets caught off guard by President Trump's escalation of tariffs on Chinese goods. It all added up to a dismal day on Wall Street, despite a mostly solid jobs report. We hone in on the tech sector for signs of life. Plus, Square Dance shares plummet after Square sells its caviar food delivery app to DoorDash, the sharpest decline since November, along with disappointing results. And SurveyMonkey surges. The stock jumps as much as 17% after beating analyst estimates, sales jumping 20% from a year earlier. We'll hear from SurveyMonkey CEO Xander Lurie. But first, to our top story. Jobs numbers for the U.S. came out Friday, while overall payroll gains were up in July, along with a rise in hourly earnings and the jobless rate holding. That wasn't enough to keep stocks out of the red, their worst week of 2019. This as President Trump decided to ratchet up the trade war with China, announcing a slew of new tariffs set for the start of September. And let's not forget, the Fed cutting the interest rate for the first time since 2008, a move that Chairman Powell described as a mid-cycle adjustment to try and keep the economy expanding. To discuss, in Chicago, we've got Todd Thibodeau, the CEO of CompTIA, a nonprofit trade association for global tech, and in New York, our senior markets editor, Mike Regan. So, Mike, why were markets so caught off guard by the president's escalation of the trade war when really there's been no end in sight?
Well, that's true, Emily, but I think if you look back to the G20 meeting last month, there seemed to be, if not, progress, at least a de-escalation of tensions. And then even when we started the week, President Trump was tweeting very early in the week on Monday about China, criticizing them, saying they keep changing the agreement when it gets near the goal line. But at that point, it didn't seem like he was ready to really escalate things with further tariffs. And then on Thursday, that's where the shock came in. He announced this new set of tariffs, and it really catching people off guard in the hopes, because they were basically hoping that the status quo was going to continue, that they were still talking, still making progress. But it's obvious that the trade delegation to China this week, Robert Lighthizer and Stephen Mnuchin, who went on behalf of President Trump, it's clear from the reporting at Bloomberg and even from the president's own remarks that they just made no progress there. And obviously, Trump is going back to that carrot and stick approach, using the stick this time to really ratchet up pressure on China with this threat of new tariffs before they sit down again to meet in September.
Meantime, China also vowed to retaliate. Todd, how is this impacting jobs?
Well, we continue to see really strong job growth across the board in the tech sector, really from entry level to expert. The industry's biggest problem is we can't get enough people in the tech workforce pipeline, so we continue to see a lot of job openings, but a lot of good hiring. We're up about 100,000 jobs for the year if you discount the telecom sector, which is really shedding their non-technical staff. But we continue to see strong results, even for desk support specialists, cybersecurity specialists in particular, and then also for some of the new emerging areas that we're seeing, like data analytics.
So, Mike, typically a dovish Fed sends stocks soaring. Why didn't it work this time amidst all these complicating factors?
Right. Well, it's being called basically a hawkish cut by Jerome Powell this week. He did cut rates. Investors were really hoping that he would not just signal one or possibly two cuts, but really that the Fed was now embarking on an aggressive campaign to continually lower rates for the foreseeable future. Now, there's obvious reasons why perhaps Chairman Powell wouldn't want to do that, wouldn't want to tip his hand if he even was planning that sort of aggressive approach. But that's what the futures markets and the bond market were really pricing in for this year and next. So to have him sort of push back against that notion really caused people to rethink that what they thought was going to happen really will happen.
Now, Todd, U.S. tech jobs expanded by 11,400. Where specifically are the most jobs being added? And is that, a positive sign, given everything else that's going on?
Right. Well, hidden in some of these numbers in terms of the way the government classifies jobs is where massive expansion in cybersecurity jobs in particular. And that's not just the people who are down in the basement at NSA. That's people who are working at the front lines doing tech support, doing help desk, doing network administration. The cybersecurity area is probably where we have a biggest deficit, maybe as much as 30% shortfall right now in terms of the number of people that we need. And then you see these emerging fields. We're starting to see some jobs move in things like IoT, smart cities, and data analytics in particular. And we're tracking now the data analytics positions now being over 50,000 total in the US, edging towards 100,000 probably by this time next year. So we're starting to see some of these new technology domains that have been out there that we've been hearing about and talking about: autonomous vehicles, artificial intelligence, virtual reality. All these new technology fields are starting to have an impact in the job market.
Now, speaking of how the trade war will impact consumers and the prices that we pay, if you take a look here in the Bloomberg, you'll see that this means President Trump will be slapping tariffs on literally almost every single thing imported from China. Some products thus far had been spared, but this is how the White House is spinning it. Take a listen to economic advisor Larry Kudlow.
Our experience and our modeling suggests that any consumer impact will be very, very small, and that the biggest burden in economic terms is falling on China.
And yet, Mike, this means that the cost of an iPhone, for example, could be raised. You know, where is tech feeling the most pain, and how much does that have to do with trade?
Well, it's great you bring up the iPhone. Apple did drop 2% today. It's down almost 5%, I think, over the last 2 days on this tariff announcements. Semiconductor stocks were among the weakest groups today. Tech and hardware really got hit hard today, that sector of the stock market. Granted, that was in large part because of some bad earnings by NetApp and Arista Networks. But NetApp did cite these macro issues as part of the reason why it's cut its 2020 outlook. So I think the whole supply chain of tech hardware is the type of place that the stock market is going to be looking at skeptically until these tariff issues go away, if ever.
All right, Bloomberg's Mike Regan, lots to continue to follow, as well as Todd Thibodeau, President and CEO of CompTIA. We'll see what next week brings. All right, now Alphabet's Google trying to fend off more antitrust scrutiny. Google now says it will require rivals to bid to become listed as alternative search providers on Android phones. Consumers will then choose between Google and 3 other companies as their default search engine. Last year, the European Commission fined Google $4.8 billion over antitrust concerns. Coming up, Square slowing down as payments volume continues its downward spiral. Wall Street thinks dumping caviar could be the right move. We'll discuss. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Shares of Square taking a hit, at one point down as much as 17%, which would be the biggest slide since November 2017 for the fintech company. Shares closed ultimately a little bit above that, down 14%. This as gross payment volume has been on a steady decline since late 2014. Joining us in New York to discuss, Lisa Ellis, senior research analyst at MoffettNathanson, who currently has a neutral recommendation on Square. So Lisa, 14% drop, is that warranted?
I don't think so. I think this one is a buying opportunity. I feel today's reaction, I think, was overdone, definitely.
Why?
Because one, the top line news of the day was that Square is selling caviar to DoorDash for $410 million in revenues. We view that as a very, very positive move, a good thing. We've been waiting for Square to do this. Caviar is under intense pressure from, players like Uber Eats and Grubhub, and it's not a core business for Square. They're far better off putting that into somebody else's hands. We estimate that's probably running at about a $50 million negative EBITDA run rate. So actually, it'll be pretty cash-generating transaction for Square. That's funds they'll be able to invest back in the core business.
That said, Lisa, when Square bought Caviar, I remember thinking this doesn't quite make sense to me, and I never quite understood what they intended to do with the business. What didn't happen there that Square wanted to happen?
Yeah, I mean, any high growth, technology company is going to experiment in a lot of different areas. They were sort of experimenting with this idea of having a full service, very integrated solution for restaurants. Restaurants are a really important vertical for them. It's over 25% of their volume. And so they thought of Caviar as an extension of that, of like this full integrated offering. Now, it's just turned out, they bought this business, 5-6 years ago, that the entire competitive environment in food delivery has changed completely since then. I mean, so I certainly don't fault them for buying Caviar in the first place. I'm just glad that they, cut the losses on this one and are getting it over to DoorDash. And look, they're taking equity in DoorDash as part of the transaction, so they'll still have some skin in the game.
Right, DoorDash, Postmates, Uber Eats, an entirely different competitive landscape, as you say. So where's the growth going to come from in the future? Yeah,
so the other big news of the day, so in addition to the Caviar sale, was that for the first time, Square disclosed the revenue run rate for their Cash App business, which is the consumer business. This is the Square Cash App. That generates most of its revenues from debit cards, consumers using debit cards, from consumers transferring funds around. They make fees off of that. That literally in the last 3 years has gone from less than $1 million in revenue to, they disclosed a quarterly run rate of $135 million in revenue. That is a quarter of Square's business. So what they're doing is they're refocusing on their two core ecosystems, consumer and seller. And the one that is really, really taking off with a steep trajectory is consumer. So by selling off Caviar, they're now able to kind of balance their investments between the consumer ecosystem, which is Cash App, and then also their traditional core seller business, which is all of the POS systems.
Now, talk a little bit about Square Cash. It's sort of been a smash, but like a closet hit, and kind of snuck up on us. What's the importance of that business?
In my view, look, as a standalone business, it's a really interesting, attractive example of these sort of digital banking models. That's sort of an alternative to a checking account for a set of consumers that likes using more of a mobile-enabled kind of digital banking model. But where it can really, over the long term, be exciting for Square is that it gives Square a two-sided ecosystem, both consumers and merchants, which then enables it to kind of create these network effects that are so powerful in payments, where they can do things like, for example, they offer a rewards program called Boost through the Cash App. They can market that to the sellers on the merchant side of the business as a big differentiator of their merchant offering, that they can bring them millions of consumers through this rewards program. It's that two-sided network. I mean, that is truly the holy grail of payments, is to have a two-sided ecosystem. And kind of out of nowhere, honestly, Square has developed one of those just in the last couple of years.
All right. Well, you got a lot of investors who don't necessarily agree with you, but appreciate sharing your perspective. MoffettNathanson's Lisa Ellis, thank you so much for joining us. Sticking with fintech, Apple and Barclays have ended their rewards card program. This ahead of this month's launch of Apple's new credit card with Goldman Sachs, a card that Apple is making exclusive to its Apple Wallet. A move Apple hopes will have its customers paying for its plethora of new services with its own card. Joining us to discuss, Bloomberg's Mark Gurman in LA. So, Mark, how impactful was this Barclays-Apple partnership anyway?
So it's something that was actually very popular maybe a few years ago, but in recent years, I know fewer people have been using it. I remember, 5-10 years ago, if you wanted to go buy a Mac or a really expensive purchase in an Apple store, they would really promote this thing. They would have easels up in their stores. They would have it promoted on their website. But it's sort of become less popular. And now, but at the same time, this Barclays relationship was very powerful for Barclays. It was a big point of emphasis for them, being Apple's exclusive credit card partner. But now Goldman Sachs is here knocking on the door with their consumer-focused Apple Card, and that sort of shrinks the room for Barclays to have, a play with Apple here. And indeed, my colleague Jenny Serena and I discovered that is indeed going away, that rewards program, where you'd essentially get 3 points per dollar spent on Apple purchases.
Now, we're also getting more details on the Apple-Goldman partnership and what that's going to look like, and you've reported it'll happen this month. You know, what are we expecting when this card program debuts?
Yeah, so the Apple Card, like you said, will launch this month. In the first half of the month, it'll begin rolling out. You will be able to sign up from the Wallet app on an iPhone. But what else we discovered is that there's going to be a companion application for the Apple Card for those with iPads and not iPhones to be able to still get the credit card. And for Apple, what this is going to do is they're going to give consumers away a single credit card that's potentially the best credit card to use when making Apple purchases, which obviously Apple has a lot of people making Apple purchases, as well as subscription service transactions through the iTunes, the App Store, iCloud, et cetera, et cetera. For Goldman Sachs, this is going to make them more of a consumer name. As you know, to date, it's really been business-focused, high net worth individuals, but this is something that's now going to be mainstream, given it's a no-fee card.
Meantime, some controversy around Siri. Apple suspending a program whereby human employees actually listen to some of our queries to Siri to supposedly improve how she or he performs. This after a story by The Guardian exposing some of these internal practices. And of course, Apple has made privacy a cornerstone of its marketing strategy and the way that it designs its products. Tell us about this.
Yeah, so Apple likes to say that what happens on your iPhone stays on your iPhone. It was sort of a play on what happens in Vegas stays in Vegas. This was their promo tagline at a big billboard they posted in Vegas during CES in January. But it appears that's really only the case unless you're talking to Siri. So Emily, I hope you're careful about what you say to Siri because they may have some contractors listening to that. Apple says that fewer than 1% of utterances said to Siri are reviewed. Which would obviously be a low number given the hundreds of millions of people that likely do use Siri when it works. But now Google has been reviewing their internal program for doing this. Apple is doing the same. They said they're suspending the program while they review it. And when they do bring it back into the fold, users will be able to opt out from having their utterances spoken to Siri for review. But in my opinion, they should have actually made that an opt-in option months ago.
All right, our Mark Gurman will wait for your next scoop. Thanks so much for joining us. Coming up, we will have an exclusive interview with Andy Purdy, Huawei's chief security officer, about the company's altered reputation since being banned in the U.S. This is Bloomberg. As President Trump escalates his trade war with China, one company continues to be caught in the middle. Huawei has seen a dramatic slowdown in sales growth as it deals with U.S. efforts to curb its business. Sherian spoke to Huawei's chief security officer, Andy Purdy, at the China Institute in New York and asked how Huawei is addressing vulnerability in its products.
We have been actively involved in independent evaluation of our products around the world. Most recently, the Oversight Board in the United Kingdom, the government body that oversees the evaluation of Huawei products, because we sell into all the carriers, not the core networks, which are the more sensitive networks, but what's called the radio access networks. And so they have identified late last year vulnerabilities in our software. And finite state, not as comprehensively as has been taking place in the United Kingdom, have brought to our attention important lessons we can learn. And so we have committed as a global company to spend $2 billion over the next 5 years to improve our software engineering processes, to eliminate the clutter in our code, to make sure we're more consistent so that there won't be as many vulnerabilities that are there, and also to make our code more readily adaptable for the new technologies of artificial intelligence and other technologies that are coming forward. And in fact, we think our competitors would really value from similar evaluations of their products, so it would help make their products more secure as well.
We're going from a 4G world into a 5G world, right? And the ecosystem is becoming much more complex. So the 5G network architectures are becoming much more complex. When that happens, carriers might not have as much control over the edge of the network. How can Huawei guarantee the security of that?
Well, the coalition of companies globally that has been developing very impressive standards to address the specific threat environment that we see in 5G, and it'll be an evolving thing because different use cases will roll out sooner than other use cases. And they've identified those threats, and they've come up with new standards under what's called the 3GPP model that are going to provide greater security and assurance and transparency for everybody's products. But let's distinguish between the core of the network, which Huawei is not seeking to do business in, that has access to the most sensitive data. With the radio access part of the network, there's a security interface between the core and the radio access, the RAN, and there's a security interface between that and the customers. The beauty of what we're seeing and what the UK operators have talked about is that the model envisions multiple suppliers within the RAN that helps manage the risk, and it helps make sure that there's diversity so you have more resilience if there's a shutdown. So while the core is physically going to move closer to the edge, the separation between the core and the RAN is going to be maintained with the security enhanced as 5G rolls out.
Did you see any progress in your meetings in Australia?
Well, not at this point. The Australian government spoke out that they're not making a change in their policy, but I think we have to remember that right now there's a geopolitical environment with the U.S.-China talks. The U.S. had reportedly encouraged the Australian government a year ago to block Huawei from the 5G network. So right now there's no chance that, despite whatever information may have been provided directly to the Australian government or in reports like the Ovum report, there's no way they would reconsider at this time. So we would be shocked if they had said anything differently than they just said.
Aside from the security issues, there seems to be an image problem with Huawei. Of course, we are seeing allegations against CFO Meng Wanzhou on violations over Iran sanctions. We have also seen several accusations from different companies about Huawei stealing trade secrets. So how do you convince the people that you can trust Huawei?
Well, the fact is, the kinds of measures we're talking about, measures to provide assurance and transparency regarding the products and the conduct of employees, is one way to do it. Frankly, when you look, though, at the global campaign that's taken place for 18 months by the U.S. government against Huawei, it's astounding when you look at the number of countries, even close allies of the United States, that have pushed back. Countries like the UK and Germany said they had been given no evidence of major cybersecurity wrongdoing by Huawei. And so they were going to continue to pursue a risk mitigation approach, which all experts call for, that would be applied to all vendors. So in the United States, we would suggest, or in Australia, block Huawei if you must, but take the measures necessary to make the communication systems and networks more secure, because they're not secure enough.
That was an exclusive interview with Huawei's Chief Security Officer, Andy Purdy. Coming up, big tech took a hit this week as U.S. stocks suffered the worst week so far this year. How tech stocks are faring amid earnings and escalating trade tensions next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. It was another big week for tech earnings. Apple projected fourth quarter revenue that topped analyst estimates, signaling optimism around its new line of iPhones. Meantime, Qualcomm shares tumbled Thursday after the company gave a disappointing fourth quarter sales forecast driven by weak smartphone demand. To top it off, tech stocks plummeted Thursday after Trump threatened to impose more tariffs on Chinese imports. Joining us to discuss in Salt Lake City, Albion Financial Chief Investment Officer Jason Ware, and here in the studio, Mobile Experts President and Founder Joe Madden. Joe, thank you so much for joining us.
Happy to be here.
So let's start with the trade war. What do you think the trade war, how is it impacting big tech now, and how is it going to impact these big tech companies over the next 6 months, given that there is no resolution and still a lot of uncertainty?
Yeah, that's right. I mean, as you just noted, there's a lot of drama going on in the chip world right now with companies that can't ship to one of their biggest customers, and that's hitting their earnings in the short term. But I think as a long-term strategy, you know, some of the chip companies do buy into this idea that the U.S. needs to push back to protect our IP and those kinds of things. So it's a short-term versus long-term sort of tug of war right now.
Jason, what about you? Look, we've had generally positive results from tech companies, including Apple, this week, and yet they're still feeling the pain.
Yeah, and we take a little bit of a bigger picture view. I mean, obviously we've had some strong tech reports this week, but if you go back, starting with IBM on the 17th of July, we've seen a lot of companies in the technology space report some pretty good earnings, whether it's Intel, whether it's Microsoft, Visa, et cetera. They're all saying that the secular growth stories that are driving these businesses are still intact. So while trade war is certainly an issue given the international and foreign revenue that these tech companies have, I still think they have a tailwind at their back.
So, Joe, you've done a lot of research on Huawei specifically, and the whole trade war has illuminated just how interconnected U.S. and Chinese companies are. And you've got chip companies, for example, that supply technology to Huawei suffering because they can no longer supply that technology to Huawei because of the White House blacklist. You've got Huawei now trying to develop its own operating system, mobile operating system, because it can't get an operating system from Google. Do you think this will permanently or more deeply sever ties between the U.S. and China that have existed now for a long time, and is that good or bad? I do think there will be a lasting impact here, that the Chinese ecosystem will develop more fully, and we're forcing that to happen. We're seeing that Huawei is really in a bad position, and no one sees it yet. The reason is that Huawei really knew this was coming, and so they started stockpiling components. Roughly the first of the year, they started buying ahead on things like FPGA components and modems and RF components and things like this. So they're actually still producing base stations and some phones using American components that they had stockpiled, and they haven't run out of inventory yet. Huawei recently announced some excellent earnings that surprised people. It didn't surprise people in the chip world because they knew they'd been shipping ahead of demand and building up this inventory. As we've gone through our analysis, what we see is that Huawei's likely to run out of that inventory about 3 or 4 months from now. And at that point in time, we think the pressure will increase, that we'll start to see more progress in the trade talks. So, Jason, what does this mean for companies like Qualcomm, like Apple, like Intel?
So, I mean, it's multifaceted. So Qualcomm is saying, for example, not only is the trade war and the relationship with Huawei a headwind, but if you look at what's happening with 5G, which is kind of an extra layer on this, there's a lot of inventory in the channel for 4G and technologies that precede 5G that are going to be flushed out now, and there's going to create a bit of a donut hole for companies like Qualcomm. I think if you look at Apple, that's certainly an argument to be made that this is going to be a tailwind for Apple in 2020, in the second half of 2020, for their iPhone device lineup if 5G hits at that time and we're able to get a cycle refresh there. So we can get a bit of a pickup in Apple's business. Meanwhile, Apple has the services story going for it in spades, and their wearables category looks really good. So I think it's a kind of a tale of 2 different narratives between some of these tech companies. Joe, all of this is happening as countries around the world race to 5G, and Apple has been a company that's been slow to adopt 5G, and yet it seems that everybody's sort of having trouble getting 5G out into the wild. We thought Samsung might have it out earlier. We've not seen that. What does that mean, given that Huawei is the leader in 5G? Actually, if you look at things back to the 2G, 3G, 4G cycles, we had networks well before we had phones. In this 5G cycle, we have phones and networks simultaneously. So I would not say that anyone is behind on the phone thing yet. Even though Apple hasn't put out a 5G. That's right, because we don't have widespread 5G networks in very many countries. Korea has a big network because they move quickly. China's just starting. The U.S. is in very early days for 5G. So I don't think anyone is behind on a 5G phone. Is the U.S. behind on a 5G network? I think the U.S. has some spectrum issues. You're onto something, and when you say the U.S. could be behind because we don't have the spectrum that other countries have in the C-band area that would be the best spectrum to use. I think the T-Mobile and Sprint merger will come a long way toward freeing up spectrum and marrying up spectrum and capital to really get a great nationwide 5G network. But the other carriers don't have the same kind of spectrum options to go after it. So, Joe, where do these stocks, tech stocks, go through the rest of the year, given that, Jason, given that there is no end in sight, and this trade war could drag on through the next election? Right, and that's the big question. And our view is that if the trade war were to see some type of resolution, or at least a truce, kind of like we got after G20, that allows these technology stocks to trade on their merits. And on their merits, they look really good. I mean, obviously there are winners and losers within the sector, but the large cap tech stocks look good, whether it's Google, whether it's Visa or Microsoft, et cetera. They all have really strong core fundamentals that are pushing their businesses forward. So I think if we can get some type of good news on the trade front, then these stocks can trade based on their merit, then things look good. However, if trade continues to go sideways or spins out of control, I think that's likely to be the dominating narrative for the next 6 months or so, and that could impact their valuations over the near term. I think the other big risk that we haven't talked about is regulation, and we'll see how things flesh out here in the U.S. over the next few quarters on that as well.
All right, well, we're all waiting for September 1st when those new tariffs supposedly go into effect and talks should resume. Albion Financial Group CIO Jason Ware and Mobile Experts founder and president Joe Madden. Thank you both.
Thank you.
Texas Attorney General Ken Paxton has joined over a dozen other state AGs in a lawsuit aimed at blocking T-Mobile's $26.5 billion acquisition of Sprint. The legal action comes after the DOJ approved the deal following both companies' agreement to sell assets to Dish. Bloomberg's Ed Hammond sat down with former FCC Commissioner and Cooley partner Robert McDowell to talk about this new hurdle. McDowell also serves as outside counsel to T-Mobile. Take a listen.
You're going to have a couple of layers of enforcement here. So the Department of Justice takes their conditions, the divestitures, the Dish deal, et cetera, to a U.S. District Court here in Washington, D.C. under what we call the Tunney Act. So a federal judge will review the deal, and that's going to take a few weeks, but that'll be done this fall. And that will be enforceable. The DOJ can always go back to court to enforce any aspect of the deal that is not being complied with. Similarly with the FCC, we haven't seen a draft order yet, but that should be coming in a few weeks, we hope. And the FCC will have, I'm sure, stiff fines and penalties for the companies if they're not living up to their end of the bargain. So that's two prongs of attack, if you will, for consumer, on behalf of consumer protection, should all these companies not be complying. So, it's belts and suspenders in terms of protection for consumers and the competitive marketplace.
And in terms of the sort of the regulatory theatrics of this, which have been entertaining, at least for us in the media over the last few months and years, we do have this slightly unusual situation where you have the SEC having come out sort of independently from Justice. Now you have Justice having come out and backed the deal. We still don't have all of the states on board, and indeed we have some states still going against Justice. Why are we seeing this sort of lack of cohesion among the different regulatory bodies?
Well, I think there is cohesion among the federal regulators, but also keep in mind there are about 18 states and their public utility commissions who have approved the deal. We've had CFIUS and Team Telecom approvals as well at the federal level. So actually, when you look at the great weights of who has approved the deal, it far outweighs the state attorneys general who, maybe for political reasons or headline exposure, et cetera, are involved in what I think will ultimately be a fool's errand, that they have such a tough uphill climb at this point now that DOJ has blessed the deal.
Well, let's
there's
talk
probably
about
a lot
that.
of reasons.
Robert, I just want to pull you on that. So what, look, the companies are obviously going to want to get this settled. They don't want it to drag on and on and on indefinitely. What can they do to get the states over the line now?
Well, the ones who are litigating, or so I think, hopefully the states will give up and understand that the settlement with DOJ really is in their favor. It undercuts the complaint that they filed in New York. And there were no damages, no risks to begin with. But if there was any doubt about that, that was removed last Friday when the DOJ had blessed this deal. So I think as the states really understand and look at what is happening and what has happened and follow the Tunney Act approval here in Washington, D.C. By the federal judge here, they will realize that they have a loser of a case. It is tremendously persuasive to the court in New York to have the Department of Justice Antitrust Division go to such great lengths to make this deal work and to cure any alleged defects in it, which, again, I don't think there were any defects, but this removes all doubt. So they have the burden, and it's going to be tough.
Bloomberg's Ed Hammond there with former FCC Commissioner Robert McDowell. Well, President Trump is still in need of a top intelligence chief. This as the president withdrew Congressman John Ratcliffe from consideration for Director of National Intelligence. Ratcliffe turned out to be a very controversial pick on both sides of the aisle. The president planned to nominate the Texas lawmaker to replace Dan Coats, who announced he was leaving the post last week. Coming up, data breach after data breach, this time Capital One compromising the data of over 100 million customers. We'll talk about the cybersecurity implications next. WeWork is setting up $6 billion in financing to fund its global ambition. But there is an unusual catch. First, it must succeed in its IPO next month. Banks will only have to make good on their commitments if the office space renter raises at least $3 billion when it goes public. Well, earlier this week, Capital One revealed that a massive data breach exposed personal information of over 100 million U.S. customers. This including sensitive information related to credit card applications, names, addresses, social security numbers dating back to 2005. This after receiving a tip, authorities arrested and charged a former Amazon Web Services employee who boasted about the hack on Twitter. You're watching a surveillance video obtained by Bloomberg News of the law enforcement raid on the suspect's home. Capital One said it was, quote, unlikely the information was used for fraud or disseminated by the individual. Since the news broke, Dow Jones has reported federal banking regulators inspected Amazon's cloud in April about the same time of the Capital One hack. To discuss, we are joined now by Nicole Egan, Darktrace CEO. So, Nicole, does this undermine the cloud?
Well, there is so much positive momentum around cloud and so many benefits that I don't anticipate seeing a pendulum swing back to on-prem data centers. But what I do think it means is people are going to really give a hard look at cloud security.
Now, this was related to a flaw in a Capital One firewall, not an Amazon Web Services issue. That said, is Amazon Web Services vulnerable, which is the biggest player in the cloud market?
So as you stated, this really attack was a result of a vulnerability known as a configuration error in a web application firewall that was specific to Capital One. But what it does show is these configuration errors are actually really very commonplace. They're commonplace in on-prem data centers and in cloud. And in this case, you had someone with a pretty good level of sophistication who was leveraging that vulnerability.
Right, someone who used to work at Amazon Web Services. And so you wonder, should Amazon be training its customers better if they're going to use their cloud?
Well, I think this does highlight a few things. It does highlight insider threat, someone who had some insider knowledge. It also highlights, just supply chain level security. But at the end of the day, it also says when you have something at this scale, why not use some artificial intelligence or something that could have spotted this? Because actually, what was done was pretty blatant. It was 30 gigabytes of data moving to unusual storage locations, right? So there were a lot of ways that something like an AI system could have detected this, but also prevented it from becoming an issue.
And normally when this happens, it's a state actor, it's going on the dark web. We don't necessarily know who has done it immediately. That's what makes this case so unique. How common are these kinds of hacks as opposed to the other hacks that you're normally on the show talking about?
Yeah, I think that in many cases, this does show configuration errors are basically a human error. Mm-hmm. So somebody somewhere made a human error mistake, right? And I think that we have to expect that humans are fallible and we're going to see that type of errors. I think what's so strange about this one is how public the disclosure was by the attacker, on Twitter and GitHub and other places. So I think that was what made it so unusual, but it also meant that the investigation moved very quickly, and it seems like there's been quite a bit of transparency as well.
All right, so this situation aside, what are the trends you're seeing right now in terms of threats, in terms of attacks, given the ratcheting up of the trade war, and that foreign actors are often behind these attacks, even though not necessarily this one?
Well, I think it's interesting timing because we're actually going into Black Hat and DEF CON, which is often known as summer camp for hackers.
Right.
And
Two
so,
big cybersecurity conferences, for those who don't know the lingo.
Exactly. And there'll be literally tens of thousands of people in Las Vegas next week. And I think that all of this is going to change the conversation. We're going to see a lot about cloud security, about 5G security. I think about encryption and decrypting data. And also, of course, the evolution towards AI-based attacks.
And as we approach another high-profile U.S. election, do you expect the threats to ratchet up? I mean, we just learned that the Russians managed to hack every single state's election system.
So I think what's interesting is there's people want to kind of say, well, let's make sure we prevent the kind of attacks we saw in 2016. The reality is the way the cybersecurity industry works, the attackers keep moving on. They keep changing what's called threat vectors. So I do think we'll see plenty of threats for 2020, but they may not look anything like the ones we saw in 2016.
All right. Darktrace CEO Nicole Egan always telling us what's happened out there on the dark web. Thank you so much for stopping by. Still ahead, SurveyMonkey topped analyst estimates this week with stronger than expected second quarter results. We're going to break down the numbers with CEO Xander Lurie next. This is Bloomberg. SurveyMonkey surged as much as 17% Friday after the company reported second quarter earnings that beat analyst estimates. The survey software company saw sales jump to $75 million, up 20% from a year earlier, and boosted its revenue guidance for the year to as high as $306 million. This as the company continues to zero in on enterprise sales with integrations with Microsoft and Salesforce as well. Joining us to discuss, SurveyMonkey CEO Xander Lurie. Xander, good to have you back here on the show.
Nice to be
here. So tell us where the new paying customers are coming from mostly.
Yeah, so we have paying customers who sit inside of 335,000 organizations around the world. And our new paying users are up to 692,000, up 12% year over year. But what's important is we're increasingly moving people onto our annual plans via our team subscription and our enterprise sales. So the big strategic push internally is let's deliver more valuable solutions for our customers, deepen that monetization, and really spending time, as you mentioned, in the Salesforce and Microsoft ecosystem selling to those customers.
You've been integrating more AI into your products. How does that change the game?
Yeah, so AI is critical because we have the largest canonical data set in the world. Over 50 billion answers have been put into our platform through 20 million questions being answered every day. So what we're trying to do is if you want to send a survey to understand the employee engagement in your company, understand the voice of your customers, we can help you build better surveys. We can help you shorten it to increase response time, put the right questions in, the right question types. We just launched Build It For Me. It's just really a template because you're asking questions in a survey format that others have asked before. So we use AI and machine learning to help guide you through a better survey process.
Medallia, one of your pseudo competitors, just went public. What does that mean for you?
So it's a huge category. You know, with Medallia going public, the Qualtrics sale last year at SAP, our IPO, I think people are waking up to millions of organizations around the world need enterprise survey software to listen to their customers, to their employees. If you're going to make investments, launch new products, new pricing, new media campaigns, change your employee benefits, you've got to ask the people. To do that, you need software, and it's a huge category. So, you know, Medallia competes in a very different part of the market. We have this massive footprint, brand, easy-to-use products, and we're moving up into the enterprise. And so I think we're going to be a challenger to a lot of companies, and I think we can all thrive.
So we've got a massive, super competitive election season coming up, and I know SurveyMonkey doesn't specialize in politics specifically, but what does that mean for the business?
Yeah, I think we're all interested in this electoral process and will be for the next 15 months or so. 2.5 to 3 million people are answering questions on our platform every day. So we have a product, a market research product called Audience that financial services, CPG companies, pollsters, people interested in the elections can use if you want to ask questions of a certain electorate in the world. male, female, zip code, income, hobbies, interests, education. You can slice and dice a population and then ask questions, whether it's what electric car are you interested in, would you try a plant burger, or which candidate are you going to vote for? So everybody's interested. I think it's...
So can you tell us who's going to win?
I mean, honestly, if we learned anything from 16, you are a fool if you think you are going to pick the horse right now. There's several interesting candidates. It looks like Biden's the leader, but boy, we've seen through the debates and through the shifting demographics in the Democratic candidacy, like it's a really early period to be calling it.
So, I know you like to think big picture about the tech industry at large, and I think last time you were on, we talked about techlash, or the backlash against
You wrote a book about
Silicon Valley, but now you're seeing it from Capitol Hill. What do you think of the antitrust scrutiny of big tech companies piling onto lawmaker scrutiny and a loss of public trust?
So I think there are a couple of different dynamics here. First and foremost, I think Americans should be proud that some of the world's best companies, biggest companies, have been built right here in America, and some of our greatest IP, our human talent, works in these companies and thinks every day how to deliver for our customers: Amazon, Facebook, Google, Microsoft, et cetera. So I think there's a lot to be proud of. With the size of these platforms, we have introduced new dynamics that are very difficult to manage. And if you look at the size of social media or the power of AI, there's got to be a lot of investment in people time and management capabilities that are put into how do we secure these platforms. So we're spending a lot of time on data privacy, security. You're seeing us elevate our game. We just hired a new CIO out of DocuSign and Talon, ISO 27001, super important. And antitrust legislation, Capitol Hill will go to super interesting stuff. And if this brings interest from lawmakers, they'll look at it, but I hope these companies figure it out before the Capitol Hill tries to.
We could do a whole nother hour with you on this topic. SurveyMonkey CEO Xander Lurie, thank you as always for stopping by.
Nice to see you.
And that does it for this edition of Bloomberg Technology. We are live streaming on Twitter. Check us out there @Technology, and follow our global breaking news network, TikTok. This is Bloomberg.